I've said it before and I'll say it again. You are going to learn this strategy by seeing real trades in action, and I'm going to enforce that. Today, the 714 method worked beautifully, right? Except for a mistake that I actually made that almost cost me the whole trade. But stick around, I'll show you exactly what happened and how I fixed it. So when we look at the charts, we are clearly seeing an uptrend. But remember the 714 methods rule. After an uptrend, we expect a downtrend. That is how simple it is. And if you look at the charts, you realize that we are sitting at the last high of this whole trend. The perfect place for you to enter into a sell trade. Why? Because we had the confirmation, right? We had the confirmation. What was the confirmation? You already know what we used to enter into our trades, right? Fair value gap, support and resistance, and an order block. Obviously, this was the last high, so indirectly we had the confirmation that was an order block right there, right? And that order block is going to serve as a resistance. Now, I waited patiently for price to reach this level, and when it did, I took my trade without hesitation. I've told you guys, when price actually reached these levels, enter into the trade without hesitation, right? It did take some couple of minutes before price actually started pushing all the way down. It was pushing all the way down very, very fast. Now, here's where I messed up. Price started pushing down hard and I got too excited. The moment I saw this massive bearish engulfing candle, I jumped into a second trade way too early, right? What happened next? A retracement. While my first trade was still in profit, my second trade was in red. Losses. At this point, I knew for sure that I got in early because that was a retracement, right? A very simple retracement. Now, after this retracement, price did manage to start pushing all the way down again. As you can see, very, very easy, right? I mean, we were already expecting it. Well, by the looks of where my TP is, you obviously know I was greedy on this trade. Look at the place that it actually is, right? You can see how far down it was. And mind you, we're still in an uptrend. The overall trend was still in an uptrend. We weren't in a downtrend, right? So when price got to this region right here, it started rejecting, right? But then something caught my eye. A strong rejection like this. Price shouldn't be pushing down like that and then suddenly just starts reversing, right? So I zoomed out to a bigger time frame and saw it. There was a fair value gap right at the rejection point. That was my clue. All I needed to do was to mark the level and watch closely, right? Then a strong bullish engulfing candle started forming, moving towards my entry zone. What do you think I'm going to do? Exit. But just stay right there. I want to show you what happened after that. Now, look at the trend. This is why it's crucial to react to what price or the market is telling you. Had I stayed in, I would have lost those profits. So always be aware of rejection points, fair value gaps, and price behavior. That's how you stay ahead in trading. Very, very easy. If you want to avoid making same mistake I did, jumping into a trade too early, stay tuned. I'll be dropping a full video soon on how to handle early trade entries. Hit the subscribe button so you don't miss it.